Sanjay Parekh, founder and CEO of Sohum Asset Managers, joins us right now on the show to talk about his thesis on the markets at large. Sanjay, great having you. Thanks for taking the time out. Been a while. But before we talk about the markets at large, Sanjay, just wanted to talk about this pressing question. We were talking to Vari just now, right? And this whole green energy, solar modules business, right, which is high growth phase, the companies which are listed and have the opportunity are priced to near perfection and maybe beyond in some cases, are running into a Trump presidency which may not be as constructive on solar, and therefore the export income might get impacted. We don't know, but it's a possibility. How does an investor approach such a high growth space which has this bit of uncertainty?
Good morning, Neeraj. So you actually covered it well. So these are great companies. We have scaled up very, very well. We have a lot of respect to be watching this company unlisted. And Ms. Doshi and the whole team, they've done a phenomenal job. It's just that what you're saying is right, that there are, Trump has a set agenda or his biases towards renewable versus traditional energy, and there could be policy tilt there. And of course, China, the protectionist policies against China will certainly a lot depend on Indian companies who are exporting there. So that could be a positive as well. So it is fluid, you're right. And while, the opportunity is pretty large, these are sizable companies and they've delivered also, which is critical mass in terms of EBITDA. And a moot question is, what is the right valuation we pay for it? And that is where even we would be not comfortable. Having said that, it's a great company. I have no doubt about it, the way this came.
Seen in the last few days. So the fears of the GDP slowdown haven't impacted the markets. If anything, they've shrugged it off well. 9 days of gains for the mid caps and the small caps, which were badgered in the previous month and a half. What's your view? I mean, is this the time to accumulate businesses, or would you use this rally to lighten up some of the positions because you might be bearish?
Yeah, no, it's a very, very valid question. So one is, I think the broad construct, the way we think is the balance sheets in India are in very, very good shape. You take the fiscal balance sheet, you would temporarily slow down in revenues in 1 month, but overall, I think the fiscal side, we are well in control. The banking balance sheets are best ever. RBI is contracted, so if it were to provide liquidity through policy, it can. Household balance sheet on the top end and the upper layer of middle end is again good. Of course, we have a lower strata where we still have problems. And then, the overall wealth effect, which is household balance sheet, and corporate balance sheet, which is lowest leverage ever. So all these balance sheets being so strong and the wealth effect that we have of 1.5 to 2 trillion. In fact, our experience was in this fall of 10%. Most of the queries we got is, do we want to invest more? When do we invest? So that is the way. Our approach on markets is that we are like at least 70% of our fund will always be large cap. And, we clearly had an earnings slowdown, and GDP growth, which was with a lag. Markets, I think, took a little early in terms of based on the second quarter earnings, which were disappointed. So we had a weak Q1, a weak Q2, a downgrade in earnings in Nifty, which could be 1,060 or so this year, which is at best 5-6%. And then next year, our estimate is it should be around 1,200, not 1,230, 1,240 as some of them expect. So then India, I don't think we would be giving more than 20 times on 1 year forward. And that would mean 24,000 over a 6 to 9 month period. So I think we are moving a little ahead. But at lower levels of 23.5, we really felt that the price risk is gone. So from here, I think as the government spend starts, we had a reasonably good monsoon. Reservoir levels are good. Government has come out of this political election mode and towards spend now. And that if we can see that helping in recovery of the economy, then I think, we are slowly moving up. So I think in a near term, I think we'll be in a narrow range, I think, and we should be much more stock specific. And in mid and small cap, the filtering has to be much more, the gap has to be much more while you're buying mid and small caps. That's our strategy.
Hi, Sanjay, good morning. Tamanna here. And, great to speak with you. I was just wondering, since there is a positive view on India overall, I'm just wondering if you're seeing the FII view and the FII flows outlook also turn positive. And to add to that, what has happened in South Korea overnight just reiterates that this is a stable democracy. If you're looking at allocation in the Asia ex-Japan region, just does India become more attractive, and do you see the FII tide now turning?
Yes, Tamanna, we clearly are very, very well poised on emerging markets, and you raised a very valid point of a stable democracy, a very strong balance of payment situation. Rupee has mildly depreciated because it's a more of dollar strength, but that's fine. So, this is a fantastic opportunity where we will grow at least at 6.5%, if not more. And that would mean earnings growth of 11-12% for nominal GDP would be like 10-11%, and earnings growth could be 12 to 14%. So it's a classic opportunity for FIIs on a structural basis. Having said that, always I think when we talk to them as well, and I was in my earlier avatar, even managing one of the global funds. So I think the way they look at is relative valuation, which is making them uncomfortable. Still, the premium is high. And that's where you saw China versus India in the last quarter. I think there's been almost 16-17% outperformance by them. So it does happen, but I think structurally the only area of concern, I would say, is valuation. The rest is all, I think, fine. So at the right valuation, I am very, very confident they'll come in.
Sanjay, just, very quickly, let's get to I would say, the main course of what our viewers are very excited to hear from you about, which is what you are looking at right now. Valuations have come off in certain spaces. What are the kind of sectors and, top ideas that you are finding exciting right now?
So, again, markets I know are very volatile, right? So we, for one, are going to use this volatility to our advantage. Because, you get stocks within large cap also at a much better entry point. So we love the themes, the financials may look very obvious, but that is one thing that we like. While auto may have near slowdown, but I think if we think from a 3-year perspective, there's a clear case to buy, and we have that. It's not that we are big overweight, but there we clearly feel we will need more representation, and we are looking at positively. While, as I said, next 2-3 months could be weak, that's fine. Capital goods we still like. We still have the largest overweight there. The cement, we are underweight right now because I think the industry is still not in a shape where pricing power is enough. Oversupply is there, and the larger players want to get market share over pricing. So I think that we are a little stepping back there. Telecom is what we like. Real estate we like. We are looking at some stocks, and we want a better entry point. We had one, but we booked profits. So IT, we are mild underweight. It's not worked for us in the last 6 months, but earlier in the 2 years, it did work for us. Pharma, we are mild overweight. FMCG, we are on zero, and oil and gas, we are not represented. So we do take sector bets, and this is how our positioning is, and we are pretty comfortable with that strategy right now. It's worked for us.
Okay. Well, come to the end of the show, but Sanjay, great talking to you and getting this gist. Thanks for taking the time out and being with us today.
Thank you. Thank you very much.
Thanks.